Square's share price rise in 2020 has been unbelievable, increasing over 600% and hitting a 52-week high of $283.19. Even after recent pullbacks, the company is valued at over $98 billion US. It pays no dividend and is a simple growth stock. Today, we're going to analyze whether Square is something that should be part of your investment portfolio in 2021. Square Inc. is a mobile payment and financial merchant services aggregator located in San Francisco, California. The company markets both soft and hardware payment products, expanding into small business services. The company was founded in 2009 by Jack Dorsey, the co-founder of Twitter, and Jim McKelvey, and launched its first app and service in 2010. It has traded on the New York Stock Exchange since November 2015 under the ticker symbol SQ. Square's customer promise is simple. They want to make accepting cards as fast, painless, and secure as possible. They do not charge extra fees or lock customers into long-term commitments. They are here to make sure that customers get paid fast and stay secure without them having to worry about it, and that is it. The company is traditionally famous for its small, square-shaped mobile card reading terminals, hence the name Square. These have been widely adopted by small stores, food stands, coffee houses, personal trainers, and salons, who not only like the design, or that payments can be taken by various devices ranging from smartphones to contactless cards, but as they are portable and powerful, this allows them to take them to the customer and not the other way around, making small business mobile. Whether you use their stand, terminal, or register, Square can help professionalize any small business, removing the need for PCs, tablets, and clunky card readers. Instead, they offer a stylish and sleek product so that customers can make payments, give tips, print invoices, and sign confirmations. Their products are so simple to use, you literally unbox and start using it right away. The terminal comes fully charged and even has a thermal printer built into it, meaning you don't need ink. Their pricing is simple. There are no long-term commitments or early termination fees, no setup or startup fees, no monthly payment processing fees, no statement fees, no additional fees for American Express, corporate or international cards, and no refund fees. Square have begun to expand out of their core North American market, expanding into Japan in 2013 and the UK in 2017. All of this allows small businesses to just start selling and focus on their core competencies. With so much digital data being shared today, customers are even more vigilant about data hacks and losses. As a result, Square has built a secure system which uses machine learning to look at payments from across their ecosystem and adjust algorithms to account for new trends in fraud, as fraud cases can cause an increase in payments disputes, which leads to cash flow issues for their customers. If a payment dispute does occur, their team of experts deals with the bank, and best of all, doesn't charge its customers a fee. Since 2011, they have saved their customers over $231 million by managing and winning disputes. On top of this, they take care of all PCI compliance, and as all Square products are compliant already with end-to-end encryption, there is no further compliance from their customers, nor any data audits or assessments required. Their software is also helping businesses get smarter and perform more effectively. Small businesses are usually at a disadvantage as they do not have access to big data or are simply using outdated systems like spreadsheets. In fact, more than 50% of SMEs fail in the first year, with 95% failing in the first 5 years. with 42% failing due to lack of market data. With better data, small businesses can analyze what opportunities and threats lie ahead. So essentially, Square is helping to level the playing field. Its point-of-sale app works in all setups, including Square's hardware. You can customize the app to name, organize, and showcase your products. It's extremely easy to use and requires minimal training. With 52% of SMEs reporting that their biggest problem was labor quality, Square can help improve this by helping to track employees' work, so employees' time can be managed more effectively. Users can create and manage their customers directly into the app. They can keep regular updates on their customers' cards to make paying easier, and digital receipts can be sent to them directly. Also, you can see direct feedback from customers instantly. They can sell them e-gift cards for future business to drive sales at quarter end or year end. Their dashboard allows customers to make better business decisions, as it shows a lot of data, such as best sellers, total sales, comparison to previous periods. Using this type of information is really going to help smaller businesses perform. The best thing is that all of this can be done remotely, so owners can check in on their businesses and employees without even being there. It helps them to manage multiple locations from the same app, helping franchises and entrepreneurs scale effectively in this digital age. They can incorporate third-party software, syncing with bookkeeping, tax prep, and e-commerce, saving time and money. The firm also generates revenue from selling other services to businesses, including subscription-based products such as customer engagement, Square Payroll, and Square Register, all what brings dollars to the top line for Square. The main reason why I am bullish on Square is that the SME market is just starting and will continue to grow. Small enterprises play an extremely significant role in the US economy and are vital to the economic development and job creation. According to the SBA in 2019, currently there are 30.7 million firms in America which are classified as small businesses. This represents 90% of the workforce, with 55% of owners saying that they set this up as they wanted to be their own boss. The most independent and entrepreneurial demographic is that of the millennial and the Generation Zers, who are uncomfortable by rigid corporate structures and thus 188% more likely to create a side business compared to boomers. With this demographic representing 50% of the workforce, I believe that the shift away from large monopolistic businesses to smaller community independent contractors and smaller community-focused businesses is only going to grow and help Square in the long run. Something which is currently helping them to forecast earnings to grow by up to 31% per year. Just like I discovered in my Alibaba video, one thing that I really like about Square is they are innovating into new areas outside their core business. The most lucrative was that of the launch of its CashAPP service in 2013, which is a mobile payment service that allows customers to create unique usernames to send and receive money. This app has seen popularity with younger millennials who are embracing FinTech as their new way of banking. This app also became available for businesses from 2015, and in 2017 the capability to buy both Bitcoin and stocks occurred, something which has been popular during the 2020s lockdown. The app is cool and the card is sleek. It's a black, customizable card. Users are asked to sign their name on their mobile device. The signature is then printed onto the card and sent to the user. It is truly unique. CashAPP has been astonishingly successful, and as of 2020, the app has had over 30 million monthly active users and over 90 million downloads, surpassing PayPal's Venmo in downloads in 2020 alone. And this is not far behind Google Pay's 100 million downloads. This app has been a financial success for Square, generating 1.2 billion in revenue, with 281 million in profits by Q2 2020. In fact, the Bitcoin trading app generated revenues of 875 million, which represents 27% of Square's gross profits. In October 2020, Square put approximately 1% of their total assets in Bitcoin, citing potential to be a more ubiquitous currency in the future as their main reasoning. The company then purchased an additional $170 million worth of Bitcoin in February 2021. This has helped the company as Bitcoin has been soaring recently, pushing the stock to new heights. So if you want some exposure to Bitcoin, Square gives it to you without directly having to buy, hold, or own Bitcoin. They have also been aggressively acquiring new businesses. In 2018, Square announced that it had acquired Zesty, a food delivery service that caters to corporate offices, and Weebly, a website building service. Then in 2020, Square announced that it had acquired Dessa, a Toronto-based deep learning company. And then in March 2021, Square reached an agreement to acquire a majority ownership of Tidal, from where Square will pay $297 million in cash and stocks, with Jay-Z joining the company's board of directors. Square is constantly re-evaluating their strategy and has been known to sell out of investments if it doesn't meet the future vision of the business. This can be best shown with their 2014 investment in Caviar, a startup that delivers meals from high-end restaurants, which they then sold to DoorDash in 2019 for $410 million. So one thing I like about this company is their management. Its CEO is Jack Dorsey, the guy that co-founded Twitter. He has been there for 11 years and is the largest shareholder, holding 11% of the company. Then you got people like Amrita Ahua, the CFO, and Alyssa Henry, the head seller. All three have been with the company for some time and own a piece of the pie, so that they are all incentivized to see this succeed. I like their board too. They have people like Roloff Botha, a partner from Sequoia Capital, Amy Brooks from the NBA, Randy Garuti from Shake Shack, David Viniar from Goldman Sachs, and Larry Summer, the 71st Secretary of the US Treasury. This, in my opinion, is a brilliant board. This company is also loved by institutions, with 65.4% of shares being held by institutions. And with Vanguard, State Street, and BlackRock being some of the biggest shareholders, it is loved by ETFs too. In fact, it is currently held by 141 ETFs, with the biggest shareholder being Cathie Wood's ETF ARKK. Financials are key, but I don't want to get bogged down in it, as you will need to take a look at these. So I'm just going to give you my 5 key points from the Q4 2020 10K. Firstly, cash is masked. Yes, they have increased their cash to 3.1 billion, but 3 billion of this is customers' money. Debt is also increasing and now stands at over $3 billion. This is a concern, as this is not only not covered by operating cash flows, but the debt to equity ratio is 113%, which is very high. This can be highlighted when they offered a $1 billion convertible note offering back in November 2020. Revenue is up 100% on 2019, beating every one of its segments. But again, this is masked by its Bitcoin revenue. If you are therefore bearish on Bitcoin, then revenues could fall dramatically in 2021, but could also go up further if Bitcoin surges. They are profitable, bringing in $213 million of profit in 2020, with a profit margin of 2.2%. This is great, but it is down from $375 million and a profit margin of 7.9% in 2019. However, this could be affected by the pandemic and the fact that most small businesses had to be shut during this time. Shareholders were diluted in 2020, with the number of shares in circulation increasing by about 4.4% for the year, meaning there is a potential future dilution risk to you if you own the stock. So as with any business, they have a couple of direct threats that you should be aware of. The first is their exposure to Bitcoin. If Bitcoin price falls, this will have a negative impact on this company, irrespective of how well their core card reading business is performing. A bet on Square is a bet on Bitcoin. If Bitcoin goes down, not only does the value of their Bitcoin holdings fall, but maybe the attractiveness of Bitcoins with millennials does too, leading to less transaction and lower revenues. I'm personally not a massive bull on Bitcoin, but Bitcoin has been hot for some time, and so further pullbacks could really affect Square's share price. In fact, 48% of Square's revenues in 2020 were from Bitcoin revenues alone, so you were warned. Their CashAPP has been one of their shining stars, but they are fighting against giants such as PayPal, Google Pay, and Apple Pay. I'm not going to comment about who is better, as each one of them has their fair number of detractors, but they are all roughly the same cost and offer the same service. The threat is that these companies are bigger, have access to more capital and resources, and their products are already being used by a wider range of users, meaning that if CashAPP does not continue to innovate or simply becomes a fad, it could be left behind. And with 35% of total revenues coming from this, it would be catastrophic to the company. Finally, I have concerns that they are acquiring into too many areas outside their core business. This was shown when last week many investors wondered why Square acquired a majority stake in Tidal, considering Jay-Z only acquired it for $56.2 million, and it's hardly lit the world on fire since. Cathie Wood believes that they have acquired this as CashApp's partnerships with musicians has integrated it into urban culture, accelerating the digital wallet's growth, which could lead to artists to sell its merchandise powered by Square's e-commerce, increasing both the engagement and reach of both platforms. Who knows why they acquired this, and we have to trust management that they see this as a good fit. But when cash is tight, I feel it may be better spent focusing on their core business. If Dorsey and the board get too cocky and invest into too many areas, this could be like an Uber situation where they find themselves having to unravel their investments in years to come. There are a number of reasons why I like the stock. Firstly, I like to have a small percentage of my portfolio in higher risk growth stocks. Currently, I have around 2% of my entire portfolio in Square, and I will be looking to add more when the market calms down, as the pullbacks have been very severe. Square saw a 15% decline during trading last Friday, and I believe that further pullbacks are imminent in the next coming weeks. And if pullbacks don't come, I already own a nice amount of the stock. So at the moment, I'm just waiting to see how the market reacts, as the recent sell-off has been very aggressive, and I don't want to be doubling down and buying the dip if it continues to fall. Next, I believe that SMEs will continue to grow and will therefore lead to an increased market for Square to sell its hardware and software to. I believe that they have a great product. Although they don't have an impenetrable moat, it is top of its class. With the vaccines coming, and with the world's economy set to reopen, I believe that their core customers, such as restaurants, salons, markets, local bars and coffee shops, will soon see a huge surge in popularity. These businesses will need a product that offers them a solution to help them take payments, manage data, and help them grow following a very tough 2020. Finally, I like Square, as by investing in them, I have a small investment in Bitcoin. I'm not a Bitcoin guy, but by owning some share in Square, this gives me a manageable exposure to this market. But what do you think? Do you think Square is overhyped, or do you believe it still has room to grow? Please feel free to leave me a comment below, and don't forget to subscribe or check out some of my other videos. Thank you very much and have a great day.